Alright, we're going to do some manual, informal type of backtesting to illustrate a few things about backtesting. The first one is we want to test if a strategy works over a larger time frame. So let's say it works in here, does it also work over the longer period of time, right? Secondly, we want to figure out if we can pick our asset classes and figure out if it works for one strategy or the other. Or if it's just random and you can't really tell. And again, the time frame thing, right? So is there consistency in time and consistency in asset or asset class, right? And the third thing is just having a consistent win rate, you know? So being somewhat consistent in letting your profits rise and not lose money, right? Rule number one of investing is don't lose money. Of course, you're gonna lose money, but it doesn't mean literally don't lose a single trade. It means make sure that your overall portfolio size doesn't really drop to zero at one point or close to it, right? Really, don't lose money. It's like not the best advice if you want to get into trading. You should be able to withstand the idea of losing money, but you should still try and prevent it at all costs. So what that means is, let's say if the chart looked like this, think about what that means, right? There's two things. First of all, it might not be as easy to establish that this is going to just reverse and go right back to where you started in a little bit, while if it went consistently up, it would be strange if it just went consistently down if you're literally following a strategy. And the second part of it is that if you increase your leverage or even just your overall size, let's say you have 10% of your savings invested, you might want to increase that if you're consistently profitable. Obviously, with this whole thing, you're not going to do that as easily, right? So you're not going to increase leverage or even just size in the first place. Okay, so with that little context out of the way, let's just take a look at MACD divergence strategies, right? Just the basics. Now, what I find interesting about divergence strategies is that in some charts, people just take any divergence, right? But that tends to be a little bit iffy. Well, this is just not allowing me to move this chart around. Strange. No, guy. Dude, you don't get to move the chart around. It's like what they're telling me. This is something I haven't encountered before. Alright. Alright. I can move it again. That's good. So, obviously, the MACD usually doesn't really diverge, right? So here we see perfect. It perfectly follows along with price action. In that case, it's not much use to us. It doesn't want to move. So apparently the 5-minute candles don't have that much history to them. So let's look at the 1-hour chart. That's the same thing as well. Time frame is a big deal. I didn't talk about that yet, but that's also definitely one thing we want to take note of. This is a good example where you have what I would call a weak divergence, right? So if you look at the peaks here, it drops down, and if you look at the corresponding peaks or highs here, they're like really weakly upwards. It's not really a big deal, right? There's some level of divergence here, but if you were to trade that, I mean, let's be honest, this thing's just going straight vertical. There's not a lot happening. If you zoom out, you see this is not at all a good signal, right? This was not at all about to drop. It was just in a very consistent uptrend, which is kind of the danger of using this strategy. You need to understand that this whole strategy depends on volatility. It depends on buying pressure, right, versus selling pressure, right? That is really the main concept here. So what happens is if there's a really steep incline like this, but there's a drop like this, what it might indicate is that if you look at the moving average difference, it has been dropping, right? So even though the price action is still rising, it's sort of decelerating, right? But obviously, if you have really vertical moves and you ask about deceleration, and acceleration, right? Which really are the same concept with different directions, doesn't really matter, right? If it's just going like this, and maybe the MACD is doing something like this, you ask yourself, does this signify D or acceleration? No, of course not, right? So when you take that into account, you understand, if you understand the fundamentals, not of the stock, not of what is up with my spelling today? What the hell is happening in my brain? Anyway, so the fundamentals of this strategy, not of the stock, but of the strategy, involve understanding the interaction between rising and falling MACDs and rising and falling price action. What does that mean, right? It means that even though, let's say that you're expanding a territory and it's happening at a constant rate, but then that slows down a little bit, right? You might get that kind of impact where even though you're still growing and still going up, the difference between the growth rates, which is the acceleration, right, is actually in the opposite direction. So maybe then it slows down even more, and then you start losing territory. So it's like, you're at over here and you're saying, well, we're already slowing down, so I think we're headed for a reversal if this deceleration keeps happening, right? That's really what MACD is doing. Imagine sine waves would be perfect for a MACD convergence divergence strategy, right? If you think about stocks that are going almost vertical and then have a slight little peak, you're gonna get all sorts of signals over here probably because of the ripples of the MACD and the way that price action is not growing anymore. And then if price action makes a very slight jump, you might get very tiny divergences, which really don't mean anything. I mean, this thing is put on a 0 to 1 scale here, right? You have to understand this is not a big scale. So if you look at this, it might tell you, falsely, that is, that you're in a very, very big move on the MACD, but that's relative to the other moves, right? So this looks huge, but it really isn't. So oil is very consistent. This is very consistent. This is all very not volatile, which is why it's so very, very difficult to trade that, right? With like generic strategies. If you look at gold, I think that... Oh, gold, this is silver. Whoopsie. If you look at gold, then we'll just look at silver and say, screw you. If you look at this, here's a good example of a convergence divergence, right? Here's a much, much better example. For example, this decline is also still very small. This is still within a very tight range here of like 0.25, right? It's important to understand how big is this move actually, not how big is it on a chart like this, right? The question is, how big is this move, right? That's why you need to understand the strategy, not just follow it blindly. Because otherwise you might say, well, if this is like, an I don't know how many pip rise, it's not going to be a lot, and this is falling really steeply, you might say, well, that indicates that reversal is about to happen. But of course, this would need to be like way more fluctuation sensitive, right? Like if it was really going up and down. So, for example, this is at least a little valley that has some interest, which is still a divergence, right? But would I trade this? Probably not. But you can see, like, we had a little... If you look at this box, we had a little reversal, right? We went from consistently rising to sort of going break-even and losing that momentum. So, really, the MACD divergence with a bearish signal here didn't indicate that we went like this and then like this. It more or less went from here to here, right? So it's still loss of momentum, right? That's really what this means. So the stronger the pattern, the more this reverses, right? The better. But here it's just a very tiny, very tiny little angle, right? Very tiny change. And I think that makes sense if you look at the type of divergence that this was. Now, I have to admit, for as much as I've looked at it, which is not that much, it seems like MACD works better on larger time frames in general. Also, just because you have bigger moves. So if you have a lot of volatility on the lower time frames, it's fine. It's more about volatility and big movers, right? Yeah. All right. So if you trade crossovers, so that's another interesting thing. Instead of saying just if you trade crossovers, let's say if it crosses over the MACD over the signal line, you might say, well, it's gonna rise. But obviously, that is more significant when you're in a downwards trend in terms of price action. So for example, if it swoops down here, this is obviously a way bigger signal, right? Because you have the running up and you have the steep reversal, right? So you have a big move and you have a fell swoop upwards. So that's this over here, and you have like 3 times you hit support. So you have support and resistance is a little bit that comes into this. Maybe if you brought in RSI, which I don't really use all that much yet. I usually only use the next indicator if I understand the previous one. I'm still expanding my understanding of this as I speak, right? So if you look at RSI, at this point in time, it wasn't really all that much to write home about. Although it did drop like to the bottom of... I have this set to 80-20 instead of 70-30. If you look at this here, can I please just get a value? Jeez. Alright. So when it hit this, see the RSI, oh wow, it hit really low. So RSI also giving you that buy signal here. So everything works out, right? But don't just look at the indicators. See, it's not like I'm like, oh, the RSI confirms what I thought. No, the RSI confirms what I thought because I'm looking at a situation where it is obviously underbought. Like you can see that from the chart, right? So really it's not about whether you trade price action or patterns. It's like patterns just help you understand price action. All trading is price action trading, right? And if you're an actual investor investing in the stock itself, well, the price is going to go up over the long term just for a different reason than because of Fibonacci and bloody blah and Elliott waves and whatever. You're not investing for that reason, so you're taking out part of the reasons why price action moves, and that means you're better off investing in the long term. It doesn't matter how you look at it, it's always about making money from the price of a stock going in the direction you predicted, right? So really, like, it's all the same thing, although it's a very different thing, right? So here you see convergence, right? So this is not really interesting, but it's a really good crossover signal, right? So if you trade crossover and cross on, so if you trade crossing, right, the crossing over or under, this would have been a really good pattern. Why? Because it is a really big move with a really fell swoop up, and RSI, right, and support and resistance. So you really have like everything aligned, right? Maybe if you looked at a larger time frame, that would complete this. But let's be honest, we're looking over a whole bunch of months here, so we have a pretty good indication that this stock was like, you know, stock was over here, and suddenly it drops like this, and it's doing this, right? So there's no real risk of this, or like not a very large risk of this going like that. And we have very favorable risk and reward because our stop loss is so well defined, right? Support and resistance makes it very easy for us. We don't have to use Fibonacci bullshit. We don't have to do anything fancy. Okay. So the purpose, as you probably are aware of now, is to explain some of the simple indicators such as the MACD, crossover, cross under, and the divergence strategies, and explain what constitutes a good signal from a bad one, right? And give examples. Because really, a lot of people just show a perfect stock that they they sought out beforehand. I'm just literally going through the list randomly, right? I'm not picking these out. Because that makes it so meaningless. You just take some examples where the MACD fluctuates perfectly and there's a perfect divergence and you trade it and woohoo money. Like, everyone can do that. Doesn't mean that you make any money. So there's a lot of constraints, I think, that you need to apply using common sense, and then you can backtest it to make it more formalized and more well researched. So, for example, here we have, let's be honest, this is not a big divergence, but considering that the MACD has shifted this far down, and considering the fact that this was rising and fell, right? The fact that this is now sort of what's it called? The fact that this is going down, to me, doesn't really mean much anymore over this time frame. Because what this really means is that it rose a little bit and now went down like this, right? But then it crosses over here, not under. So really, you have to ask yourself, what is more important here? The fact that we had a little downturn here, or the fact that we're crossing, like we have a very big move down and a crossover like this that is very large and sharp, just like before, right? So which ones of those wins out? Well, first of all, we're two obfuscated variables. RSI works in our favor. We didn't look at different time frames, but just looking at that, well, we do find ourselves in sort of, again, it's not very volatile. We have general support zone here, right? Like, not a big deal. Where exactly those values are, people sometimes tend to put it very strictly, like it's a single line. Obviously, because market makers try and abuse stop losses to move people out of their trades. Stop losses are always zones, right? Never points on a chart. It might be that the same point has been hit a couple times. That doesn't mean it will hit it again in the future, right? It might hit close to that point in the future. It's a confidence interval, right? That's the point. Like, it's a confidence interval, not just, and that forms a zone, right? Anyway, another commonly sort of slightly abused thing. Point is, with this crossover, I would have taken that as a buy signal, right? So I would expect this to move up and recover. Like, I would expect it to be somewhere in this zone before it sells. Like, let's say if we take the most conservative level here, I would expect it to reach here before it might reverse. I might have to take another look at that stage, right? So this is a good example of a trade I would still take at this point, right? But it's not really that clear. Like, it doesn't have the clean setup. It's like a 50-50. I feel like if you, depending on how much time you want to spend trading, I mean, if you have to take that trade, I feel like you're, taking too many opportunities. You might as well just wait for the right one, especially if you're trading CFDs and you're leveraged out of your brain. Why not just take better win rates? This is a good example of, let's say, if we convert it to a day. Look at where this is on the daily. Well, at some point I did this to this chart. Not sure why. Anyway, if you look at this, it really hasn't ever crossed below this in the last 3 years. Right? Now, I don't know the fundamentals of coffee. I don't know how it's being harvested and how that harvest went this year and blah, 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 and when that is. Like, when are the results in? So there's a lot of stuff you might be able to figure out. But obviously, like, the reason this is, like, I bring this up about the data of buyers here. Everyone's buying this because it's near a level of support. It's really never gone below that point. It's never gone below this point. It's at all-time lows. It's unless I'm missing out on something, there would be no reason in massive jeopardy. I don't know if coffee production has been hit by the corona crisis, but I would be very surprised, especially since the market is behaving rather nicely. It's not, you know, it's nothing too worrisome. Like, it seems like this correction was the first thing that happened, and now it's consolidating. You'd say that from this point on, the only reason it would get new lows is because of something that's not related to technical analysis. So if you want to bring in fundamentals into this, yeah, it might be relevant to consider that, right? But that would be a decent trade opportunity, not because of the MACD signals, but because of another reason, right? In this case being the, what's it called? The fact that it's near an all-time low. So you have a level of support that's like, if you indicated it with bar strength, it's like 10 lines, right? This is like, it has to crush it if it wants to break that. Okay, so looking for more, right? Looking for more. Also for gas oil. See if we can do some. If you notice, all these stocks are running flat. MACD signals are pretty much worthless, right? So really, there's no point. I'm looking at closed markets as well. I'm just looking for divergences and talking about them, right? I'm not really live trading right now. It's not really the point here. So this stock's making some funny moves. I mean, it's doing something at least. You can see this is trading very similar to coffee, right? Which I find, like, it's actually scary how much it trades like coffee. I didn't know these two commodities were so ridiculously close to each other. Like, this is at 96.2, right? And coffee is at 96.2 as well. Like, it's literally so close. It capped at 124, and coffee capped at 124 as well. I didn't know this matched each other in price to like 1% accuracy. Crazy stuff. Alright. Absolutely crazy. I don't know. I don't know what that means. I don't want to know. I don't know. I don't know what that would possibly mean, right? So let's look at 1 hour, because it might give us a little bit more fluctuation to work with. Now, if you're trading extreme short term, I'm sure you can find some sort of divergence eventually. You might be able, like, when it oscillates like this on the very short term, you might be able to make these very slight winners. Let's say you could constantly trade it. For example, here you could set a stop loss over here and set your profits like down here, right? And then if it goes over here, you might set your stop, like, wins over here, and set your stop loss like down here again, right? Like the same point as before. Like, maybe I'm not drawing it perfectly, right? And you would have hit that. That would be 1 win, 2 wins with like 2 to 1 or better risk reward as well. And you can see here, of course, like, we're starting a little bit of downwards momentum here, right? You can see that. That's what we were trading in the first place. Because this is just a slight downward trend, right? So for example here, look at this, right? Well, you can see this happening before the MACD does anything. So here, look at this. This is a very strange bar, right? If I look at this, I go, huh? Because it comes out of the blue after a red bar. It doesn't really happen. Like, I would rather have this kind of thing, right? Looking at this is a good indication of a MACD that just does not work at all. right? And why? Because look at this. Is this momentum? Is this upwards momentum? No, it's not, right? It's not at all upwards momentum. I'd say on this downtrend, I'd much rather trade that downwards momentum, right? Okay, so now we're over here, and now we're flattening out, right? So look at this. We're losing momentum, and this is really steep, right? So this is the reversal for me, right? And then once it hits over here, you can see it kind of caps out, and it didn't really make a big move. And here it crosses over again, and it just keeps... Like, if you look at this from a larger time perspective, what it did was this. So it went like this. And then plus signs are in the way. Yeah, I don't need, like... Don't go away. I don't need to actually see the chart, you know. Ay, caramba. Okay. So if you look at this in a larger... Oh, now this is in the way. Like, I love it. I love it when I have a lot of information on the screen that I don't want to look at. Like, beautiful. Anyway. So, look at this downtrend, like this, right? This really broke out of that, right? Like, when you look at this, signal here, right? This is really when shit kicks off, right? So we had that here, we had that here, and we had that here. And it's funny, because if you look at it, this would have been a perfect time to reverse the market, right? And this would have been over here. And I'm not sure why that failed. Didn't work out. I would probably hit my stop losses. This looked like a really good trade to me. This one looked rather silly. It's just a slight little move like this. It doesn't really do anything. And this one would have been my second attempt. And the second attempt would have worked. This is where it really breaks out, right? Now you could say that as long as it's in this channel, you don't know shit. So it's not a confirmation of anything more than a very, very basic pattern that doesn't tell you that much. So you need additional confirmation. So you might say it's trading within this channel, right? And then it breaks out. This is really the moment. This is the moment. So really, if you look at that, it's not really part of a MACD signal, right? But it's definitely significant, right? And if you look at, if I just remove all of this, you can see that another type of MACD is at this moment crossing over, right? So this just in terms of looking at the averages, obviously some level of average is going to break out at that point, right? So this is 15 and 50. So those are slightly different than 12 and 26. I don't know what significance 12 and 26 has, why that's so popular. But the point is, you can obviously see that a trend is being broken. Not just because of the moving averages, but just because you see it's within a channel and it's breaking out. So obviously it's going to break out of some sort of MA pattern as well, just not perfectly timed with this one. Like this one was already above the signal line in the first place, right? So you might say, well, if it's above the signal line, it's going to return to it, which it did. So maybe this would be an even better pattern because we just broke out. So when you have this, it broke out a second time, so you have confirmation, right? And you have the, what's it called? You have a crossover. So you could say, well, this point over here was way better to trade it. Then you would have had a really clean swoop to, for example, this level of resistance zone right here. If this is where you took profits, right? So you see, you have to use your senses. It's not enough to simply say, oh, crossover. If you just apply crossovers, you're going to have exactly 50% win rate. It's a coin toss altogether. Maybe it's slightly better than a coin toss. Maybe if you combine it with RSI, it's slightly better. But look at RSI here, right? So during this entire run down, right? If you look at RSI here, ooh, buy. Ooh, buy. Okay, a loss, right? Ooh, buy, loss, right? Buy, loss, right? So, like, this is really not, like, and at this point, like, where's the buy signal here, right? There's no buy signal. But the point is, if you look at this stock, nobody would think, well, it's on a downwards trend. Let's trade reversals, right? I would trade reversals when we know the trend is being reversed, right? If it's within this channel, and these are the higher, like the lower highs, right? And it hits over here, would you buy? No, of course not, because you would first want it to break out and then boink against this newfound support, and then break out again. That's when you trade it, and that's what you do if you traded over here, or if you waited until it retraced a little bit over here, right? And then here it broke out a second time. So this is what I'm talking about. Breaks out, pulls back, and then it shows that it breaks out again. So then it's like after this it didn't have a lot of momentum, but the reversal was already put in place, right? You can see, like, right now, this is a really long consolidation period. This trend, this can go either way. I'm not sure. If I knew every trade in the fence, then I would be rich, right? I wouldn't have this remaining in my account, right? Obviously, I emptied it, but anyway, that's not the point. Point is, this is now just gone flat, right? So the run is over. If you didn't take profits, I'd take the profit now because you don't know what's going to happen. So your trade setup has dissipated entirely. There's so many ways to look at the same piece of information. It's kind of scary, right? So you might say, for example, well, if you look at this, it's consolidating, right? And then what is it going to do after it has finished consolidation? That's something I want you to take a second to think about that. What does a market do after it finishes consolidation? Well, it breaks out. Okay. In what direction? And another question is, when does it just stay flat? Because obviously any piece of information that you have on a market is valuable, right? So if you know a market's going vertical, you can trade strategies that make money off of that. If you know a market's going either direction, just not vertical, you can also trade that, right? You can speculate on virtually any property of the market. Maybe, I don't know if you can say, okay, I'm going to trade RSI, right? I'm going to trade RSI. That would be very strange, right? I don't think you can trade that, but you can trade the various properties like time value, price difference remaining zero or close to zero. You can trade it being within particular ranges of profit or deficit or anything above or below, right? You can do all of that with options, right? And also in some ways you can achieve similar results with regular shorting and buying, but anyway, so if you want to know what the general trend is, or what the market does, what you think it's going to do after, obviously you would have to look at the larger market cycle, right? After a period of consolidation. For example, Bitcoin usually breaks out up and not down after a period of consolidation, right? It usually rises up and then crashes instead of crashing down and rising back up, right? If you look at this on the weekly chart, oh, that looks lovely, right? So those MACD signals also just look absolutely stunning, right? Um, if you look at, for example, there's no divergences, but look at these clear crossover signals. These are good examples of crossover signals that work, right? If you go from here to here, you made money. If you go from here to here, you made money. Now, if you somehow think this little thing here is obviously a little blip, and then over here you would have made a lot of money, and then over here, so it's making really nice moves up and down according to what MACD suggests, right? So here you can see as soon as it loses steam, that's kind of what the MACD indicates in this case, right? You can say, well, over here it wasn't enough, but here it really, this big red candle is enough to cross over. So really, if you're just looking at price action, that big red candle is all that's giving that signal. So if you ask somebody, is that a good signal? Well, that just depends on this support and resistance, right? Or you can look at slopes, or at vertical lines, or horizontal, I mean, right? In this case, I would say it broke out of this line. I really feel like this MA is way more significant. If you look at this chart, right? Look at the 15 MA and what role it plays in determining support and resistance, right? So for example here, look at how perfectly that bounces off of 50 MA, and as soon as it reaches here, look at this. This is not like, there's no sort of trend or support and resistance that you can infer here, right? There's been so many slight moves here that it's really hard to establish one clear line of support or resistance. But look at how perfectly that bounces off here, right? Look at how perfectly that bounces off here. Are you gonna tell me that out of these 27 different layers of resistance that it had to bounce off of this one because it had slightly more reference in the past? Well, how about this one, right? That one doesn't line up perfectly, right? So if you look at this, if you take this level of resistance, that matches almost perfectly, right? Look at that. And if you take, for example, this level of support, see this? That works almost perfectly as well. So you really have to determine the strength of different levels of support and resistance, right? These are the strongest ones, and you can see how well they function, right? So for example, here it broke out instantly. It had a little doji bar when it first initiated this, and then went down, which serves as confirmation. So then we hit the bottom, and obviously after hitting it here, I would really take this as an indication that we tested it so many times, and there's no real wedge or something. It's not driving it into, it's not wedging it into the support here. So really, we're just going to go back up here, and then it just breaks out in one fell swoop, right? After coming back down. It's a new move, breaks out. And yeah, here there's no real clear reference for me for this bar. Maybe some people are gonna state Fibonacci or trace it back further, like further into the past. But we're already looking at a rather large time frame, so there's no real clear signals for me. I would just let it go. And then of course, like you see here, it's just catching up with great momentum here. And then the question is again, are you basing a trade off of one bar? Because that's what you do if you trade the crossover here. The crossover, you might as well just leave that out. If that's your entire strategy, you don't really get information. Divergences are hard to spot without looking at the indicator itself. But I could say, like, obviously, if a stock is on a run and it makes a big downward swoop here, like over here, yeah, you're gonna have MACD like signals, right? Like over here, not over here because we were already going down, right? What initiates the play, the whole thing of reversal, that's the whole point, right? That's the signal. So really you can handpick that, but then why not just look at the additional factors such as the flexible support and resistance and the other EMA and whether that breaks through it, right? Alright, so with that being said, let's take a look here. Here, obviously, when it does this, right, you're looking like, what is the sort of the indication that you're going down? Well, this is just a crossover indication in conjunction with consolidation. So really, you're just looking at something that breaks out of this consolidated part, right? And that worked perfectly. That just swoops really, really hard, and it hits a green bar here that's really big, which I think would mean anyone takes that as a stop, right? Not much you can, like, this is very dangerous play. If you want to trade over here, like, there's no real support and resistance yet. It's not really oscillating between certain boundaries. It's just like me go up, but look at this, like, it's like me go up, but me is already going up, right? So it might, like, I don't really know what this is going to do, right? Like, look at this as well. It's kind of driving it in here. I don't really like that. I don't really like any part of that, right? I want clear support and resistance, right? Clear breakout and confirmation. You know, the crossover, which signals that we really did have a sort of reversal based on the breaking support. I want all of that, right? I don't want some clumsy trade with, like, you know. Let's see. This is not for me, right? This is not for me. I don't know which way this is gonna go. I have no idea. So let's say, for example, here, right? It's a good example where you look at this most recent price, right? This has been acting as resistance or support, or like a level of reversal. But look at this, right? So as long as it's trading within a more recent and a stronger, more well-established support and resistance, I really want confirmation that it's going to break out of one of these two, right? So you want if you're into narrow zones, right? Do you want to, like, while it's in here, like over here, do you want to trade the oscillations when the oscillation is like this wide? What is this, narrow? Of course not, right? Or at least I don't want to. Maybe this is possible. That's gonna consolidate for a while. But looking at this, like, yeah, you know, you could have made some money doing these little oscillations and then eventually get stopped out once and the pattern has changed. Makes you some money, sure. That's not how I trade, because I'd be looking at a billion different small plays. Like that would just be the only thing I'd do in that case, right? So it's too much effort. But obviously, if it breaks out, not enough information. There's a lot of bars that go this and then go this and then do something else. That's not enough. But if it does break out, it's the resistance, or like, you know, like the reversal, and then it confirms, right? That's when I want to trade. So when this is confirmed, I want to trade, right? And then ideally, I don't have another super strong level waiting right here. I just have some space here, right? So the more space I have on the upside here, the better, right? That's another part of this trade. Alright. So what you can do here is I'd set signals, right? On this, in this zone and this zone. Let's do it right now. Let's do it, like, who cares about how much you have? I could take larger risks and just risk blowing up my account. There goes my 50 bucks. I mean, who cares? Maybe that's not a good mindset, but let's be practical. If it's 0.01% of what you... I mean, it's I don't know. Maybe not the right mindset, but... Alright. Well, that didn't work out. So, I want to set alerts. Close this down, set an alert. Oh, this is the weekly. Anyway, so let's not set it on the weekly. That's going to cost too much in commissions. All right. But yeah, those are some very common things that I just want to talk about. So the most key takeaway here is to think, okay, price action and indicators are not there's no battle, right? You just have to understand, like, what is the relationship? Try and understand how the indicators work. It's just like doing computations for you, right? It's like instead of you having to try and calculate, it does it for you. So it's just a bit of help. It's just a bit of information that's already in there, right? Unless it accounts for volume and you don't have that opened up on the chart. But generally speaking, it's already in there if it's price based on the price, right? So just make sure you understand that. It's just an embellishment. It's just extra help. Second thing is constraints, right? You have to understand these signals. You have to understand the constraints. How do you do that? By doing fundamental analysis, not on the stock, but on the strategy and on the indicator, right? So ask yourself, what does X mean, right? What does divergence, for example, mean, right? In the market. So that, like, let's say if a stock is running vertical and suddenly, a little divergence happens, what does that mean? I mean, really, it's about the acceleration, deceleration of a stock. So does that mean anything if it's going almost vertical or horizontal, I mean? What about if it's going like this, right? Obviously, it all depends on momentum, and momentum needs volatility, right? So that is something that I demonstrated, the point of understanding the signal and understanding when it applies and when it doesn't, right? And understanding that, for example, the simpler the strategy is, like just crossovers, the more easily you could just confirm that on the chart and go, this is already in a little bit of a slope downwards. But if it was on an upward slope and somewhere it's going to have some red bars, yeah, you're going to have a crossover. But is that something you want to trade? I would probably trade confirmation, right? Confirmation is a key word that comes up all the time, right? And that you need to do a little bit more analysis on support and resistance, right? You look at the RSI, you look at different time frames, right? And you incorporate that to understand when something is confirmed and when it isn't. And just use the crossover as a confirmation that you understood the thing you saw correctly. So that is just an embellishment on, again, just like the indicator itself, this signal itself is just a little embellishment on what you already know. And you might use it as an alert, right? So use the confirmation thing, crossover as an alert, not as a trade. Because I've backtested it, I can't make money with it. If you can, good for you, but you can make more money if you're more consistent and you look at more things. Alright, that's it for this rather long sort of trading lecture. I'll see you in the next one.